This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. As a little salute to all of you Star Wars fans out there, and I know Episode 7 is upon us, let me go back in time to The Empire Strikes Back. A little Yoda, a little Luke Skywalker. For those of you out there that are convinced that you can't make it, you can't do it, it won't happen for you. You've got bad luck. You woke up on the wrong side of the bed. You were born on the wrong side of the tracks. Your family didn't help you. Your religion didn't help you. Your friends didn't help you. Everything was against you. You always have the internal. Coming out, what could have inspired you to think of Yoda and the Force and the unexpected connections that happen? Let me share a story, a fun story. I like to think that this story involves the Force, whatever that Force might be to you. A few weeks ago, I was sitting in business class at the airport in Saigon, Vietnam, sitting in business class with my parents who were visiting Asia for the first time. I took them around Asia to 2 different countries. They saw multiple cities. They really enjoyed their time. So we're sitting in Saigon Airport. I can't remember the name of the lounge. I think it was called the Rose Lounge. And we were taking the red eye to Tokyo. So I'm just sitting there with me and my parents. I'm charging my phone. I'm playing with my phone. I'm sitting looking at my parents. My mom is on my right. My father is in front of me. From behind me, I hear this voice, this request. Because my phone was plugged in such a way that it was sitting in front of me, but the outlet was behind me about a meter. So I hear this request from this voice, and as I turn around, he's asking me, he's not really asking me, he's doing it. He has this big heavy-duty construction cord that's an electrical splitter. And he says, hey, can I just do this? Can I just split our line here? Because I had the only power outlet, so he wanted to share the power with me to charge his stuff, do his laptop, whatever. And as he's asking me the question, I kind of turn around because I'm sitting and he's crouched down. And I'm only about a meter away from his face. So he's asking me, hey, can I do this? Can I share the power with you? In that split second, I'm looking at this man, and it's one of those instantaneous things you have to have. I look at him and I say to myself, well, that's the co-founder of Apple Computer. That's Steve Wozniak asking if he can share my power with him. Without skipping a beat and being cool as a cucumber, I'm no fanboy or anything. I mean, I've read about Steve Wozniak. Of course, I know how important he is to computing history. But it's kind of odd because I'm seeing him in his older version of himself. He's around 65 now. So all of a sudden, that 1 meter away, he looks at me and says, hey, can I share your electricity? Without skipping a beat. I said, sure, as long as you give me a selfie with you. He smiled, kind of laughed, and he gave me a great selfie. He did note, though, as I was taking the shot, he said something to the effect, well, at least it's nice that you have an Apple product. I did not attempt to talk to him anymore or anything of that nature. Guy's a busy guy. I'm a busy guy. It was just one of those weird happen chance, the serendipity, the Force, so to speak. How in the world, how many different events had to take place for me to have a random encounter in Saigon Airport with one of the most famous computing pioneers in the history of mankind? Now that's a damn cool story. I'm not really sure what its ultimately big picture meaning if there is one, or it's just, as I say, the happen chance, the serendipity. But I posted this on Facebook. I posted my selfie with Steve Wozniak on Facebook. And wow, it was really interesting. People just loved that. They just thought that was the coolest thing. It's cool to me, but I've met a lot of interesting people. I met Mikhail Gorbachev. I actually had a chance to talk with Mikhail Gorbachev. I met a lot of famous traders. And what's really cool also is no one else in this lounge, this business lounge, there must have been 200 people in there, maybe more. No one else even noticed the interchange that I had with Wozniak. No one else noticed him. Nothing. So as I'm leaning backwards to ask this man for a selfie, I then turn around and my father looks at me like, who did you just take a picture with? Why did you just take a picture? They had no clue. So a few minutes later, I went over and sat next to my father because Wozniak was only sitting like 10 feet away. And I sat next to my father and I typed in and I said, hey, I typed in on my little notepad on my phone. I said, hey, that's Steve Wozniak. He founded Apple Computer. Of course, my father thought that was the neatest thing since sliced bread. Proceeded to walk over on the other side of the lounge to try and get photos of him completely being the fanboy. And of course, it even gets crazier that on the plane to Tokyo, Steve Wozniak sat 2 rows behind me. Did not talk to him again, but I thought the force was in play. On to some market insight, some trend following insight. I was recently forwarded an article, Meet David Harding, the man behind models that beat the market. Jonathan Shapiro from a magazine down in Australia from somewhere. It's called the Australian Financial Review. I've never seen it, never read it, but I saw this one article. Someone forwarded it to me. Actually, many people forwarded it to me. Let me read some excerpts with a little bit of comment. The 55-year-old founder of London-based Winton Capital Management's personal fortune of US $1.5 billion is irrefutable proof that systematic trading can work and works spectacularly well. But that does not make him immune from cynics and doubters that dismiss the black box funds he has built. Now, of course, black box is in quotes. I've addressed on this podcast many times the comment of black box. Continuing in the article, Harding says, his first comment, quote, people are mathophobic. There's an unnatural hostility with people insisting that funds are black boxes. If you don't understand our fund, it's because you haven't made the effort to understand it, end quote. What a great line. If you don't get trend following, it's not because it's a black box. It's because you're lazy. Continuing. Yet unlike other masters of the universe, Harding's voice is not ubiquitous in the media. The machines do the trading, so Harding, his team, and his fund have no headline hogging views on the macroeconomy, the next big stock, or a compelling short. And he couldn't care less about what the Federal Reserve might do next month. As Harding says, quote, let's face it, could you come up with a less interesting story? It's so boring you want to shoot yourself in the head at the mere mention of it, whether 12 people will change the interest rate by 0.25 percentage point, end quote. Don't you just love David Harding? He's made an absolute fortune. He's running a significant fund, and he talks like the guy that's still running minor money, maybe his own money, maybe only trading his own account. He still talks like he hasn't won. And you know what? He hasn't won. That might sound crazy. He has not won. There will never be a win. It's just incremental advances. And he knows that. But that's what's so cool, because he's always fighting. He's always giving the system a punch to the gut. Love it, love it, love it. Continuing. But he says defiantly, the critics forget that systemic funds are only having an impact on markets because they work. Quote, the reason the trend following or the systematic investing industry has gotten big is because it has been successful. No one should miss that point, end quote. Damn straight, trend following works. It might not work for a month. It might not work for a year, but it never stops working. It never stops working because you can't make money every month. You can't make money every year. That's not the point. If you actually do your homework, if you actually do your analysis, you will know that trying to make money every month is fool's gold. Unless you're and you've got inside information, inside access to the exchange servers, then, and only then, can you produce money every month. But for us mere mortals, and David Harding is still a mere mortal because he's a trend-following trader. He might be the most successful one, but he's still a trend-following trader. And trend-following traders are mortals. We admit that. We say we are human. It's the others that pretend. Continuing with the excerpt. The $30 billion fund that Winton manages hasn't come easy. It's been a multi-decade-long pitch to convince the skeptics that a scientific data-driven approach to investing can deliver returns. His sworn enemy is a theory hardwired into every student of finance, the efficient market hypothesis that states that the market reflects all available information, which therefore makes it impossible to systematically beat it. Quote, the theory said everything I stand for and everything I've done my entire life is a complete waste of time. I've had a lifelong battle because when we studied the data, we found it wasn't true. And then we made money out of it and tried to build a business on the back of that, end quote. Yet efficient market hypothesis still messes with David Harding's head. Quote, it pisses you off after a while, but largely because of your own self-doubt, I have to say, end quote. Harding goes on to say, investment management is about self-belief. Every time you are losing money over a period of time, you are doubting yourself and you're anxious. Every time you go into a drawdown, it's a case of, there you go, told you, markets are efficient, end quote. Even if you're a systematic trader, investing is a personal, internal, psychological war. Harding concludes, quote, you become very successful in investing once the money means nothing to you. It's an intellectual exercise. If it actually matters to you, then it's really much harder to be a successful investor, end quote. Some of that last language about the money not mattering, I go back to my original work, Trend Following, my book, Trend Following. Money is a way to keep score. You can't run a systematic fund. You can't run a systematic strategy if money means something to you. Now, of course, money means something to you. There's utility to money, of course. But you can't be systematic if money means something to you. Beyond money as the fuel for your system. You put the fuel in your system and you run the system. If you allow every emotional impulse, however you're feeling that day, nervous, anxious, scared, etc., all those things that Harding just talked about, if those are built into your system, you don't have a system. You're just back to chaos and watching CNBC and mental masturbation all day long. I hope David Harding never, ever stops being so blunt and educational. He has truly become the master of the one-liner, the master of summing up his defense and his promotion of trend following. We're all very lucky that even though he has hit his home run and made himself over $1 billion, we are all very lucky that he sings the true verses of what this strategy is and why it's successful. And you could be damn straight he's not about to stop now. That's motivating. That's inspiring for all of us. I want to take a few moments now to go into a little more depth on trend following, specifically from a white paper titled Overfitting and Its Impact on the Investor, put out by the Man AHL Academic Advisory Board. I'm not really familiar with that board, but I do know that Campbell Harvey, who has appeared on my podcast, a professor at Duke, is on that board. You can easily find this brief white paper online, but I'd like to read some of the overview comments from it. Overfitting is when a model describes noise rather than signal. The model may have good performance on the data on which it was tested, but little or no predictive power on the new data in the future. Overfitting can be described as finding patterns that aren't actually there. There is a cost associated with overfitting. An overfitted strategy will underperform in the future. We are biologically hardwired to overfit. Catching on to patterns can be an evolutionary advantage even if the pattern was not real. It's a phenomena found not only among humans, but also in other animals, such as pigeons. Discretionary managers are as likely to overfit as quants and may be less aware of it. Strategies based on theory are not immune to overfitting either. Common methods to deal with overfitting include using a range of models instead of relying on a single one, model confidence set, penalizing models for complexity, considering model stability under parameter variation, an independent review process, and monitoring the rejection rate of strategies through the review process. Finance is not alone in facing the challenges posed by overfitting. It is a common phenomenon in science as well. Data mining, the process of finding patterns in large datasets using computers, has become more popular in science, and most branches are using similar methods. In particle physics, artificial data is used to optimize the analysis without overfitting. Further methods include a rigorous review process and strict data partitioning. Few branches of science have to deal with such inherent non-stationarity and feedback effects. In finance, the investment environment can change and a strategy that has worked in the past can stop working. A good way for an investor to see how a company deals with and reduces overfitting is by analyzing its culture. An environment with high tolerance for failure in research is likely to produce less overfitted results. Those were the summary bullet points of this small white paper. Let me read a few excerpts from the paper. First, from Cam Harvey. Overfitting is when you propose an overly complicated model to explain something rather simple. It can also be that you found a simplified model that works only by chance. An overfitted strategy will likely underperform when faced with new data, be it the out of sample the analyst has not yet looked at or when placed into live trading. This happens because the model does not adequately describe the effect, but rather the noise in the data. So when you apply it to the data it does not know, it becomes much less efficient. This type of data mining has been on the increase with today's easy availability of both financial data and computing power. There is just too much data mining going on now in finance. Harvey is dead on there. Too many people are sitting around with their computers and a bunch of data, especially on the very short-term movements, trying to pull something from these minuscule day trading movements. You will just never know if that will pan out until the day of reckoning happens. It might shine on for you brightly for many years, and then boom. Careful with your computing power. Careful with your very short term. You're on the edge. One more comment that I want to read from another professor in this white paper, Neil Shepard. We do seem to be hardwired to overfit. Research has shown that people have a tendency to over-infer from small data samples. The gambler's fallacy is a good example. When we think of it from an evolutionary point of view, overfitting was probably helpful for ancestors. If you heard a noise and assumed it was a predator, then you might live to pass on your genes, while the person who didn't react might not be that fortunate. The preference for overfitting was therefore passed on. But it goes beyond offering an evolutionary advantage. We are also strongly motivated to find explanations for events so as to feel that we are in control. Boy, we want to feel. We want to feel that we are in control. Continuing. If we believe that Zeus causes earthquakes, then we can appease Zeus to try and stop earthquakes. By detecting and explaining patterns in the data, people feel better, more in control. Confirmation bias just makes things worse. Once we have a hypothesis in mind, we are too accepting of further evidence confirming it and too closed to evidence against it. That's one sentence that entirely takes out the notion of daily macro fundamental analysis. If you wake up every day and somehow or another you think that your particular macro view for that day will help you to trade markets for that day, insanity, pure insanity. It doesn't work that way. You might say to yourself, but Michael, that's just your opinion. No, it's not my opinion. The data's there. I'm not going to sit here today and read off all the data. You can find it. It's easily found. White papers on my website, trendfollowing.com/resources. Trendfollowing.com/start. My books. This podcast. In my books, go to the bibliography. Go to the endnotes. The detail is there, but it's up to you. As Harding said, you can pretend that these great ways to view uncertainty don't exist. You can pretend that you will know tomorrow. That can be the course of your life. Just don't bet that way for 5 years, 10 years, 15 years, 20 years, 25 years, whatever the time frame is. Don't bet that way that you can control everything and you can predict everything and wake up one day and have your ass handed to you on a silver platter and 50 or 75% of your net worth taken away. There are much better options than trust. There are much better options than blindly thinking you can control tomorrow. But it's up to you. It's absolutely up to you to dig in deeper. On my way out today, I would like to close with 2 quotations that I've seen most recently that I really love. First, from Christopher Hitchens, quote, "If someone tells me that I've hurt their feelings, I say, I'm still waiting to hear what your point is. In this country, I've been told that's offensive, as if those 2 words constitute an argument or a comment. Not to me, they don't. And I'm not running for anything, so I don't have to pretend to like people when I don't." Again, Christopher Hitchens, fabulous. And my last one, from soon-to-be-retired professional basketball player Kevin Garnett. I really only happen to be familiar with Garnett's career because later in his career, I watched him win a championship with the Celtics and got a feel for his attitude, his vibe, what he brought. Today, as he ends his last season in professional basketball, he's tutoring the number 1 pick in the draft, Karl Anthony Towns, tutoring him on the Minnesota Timberwolves professional basketball team. And this quote from Garnett was just great. I just love this. "You can't teach the beast. It's either in you or it isn't. You can't just go to the store and buy a 6-pack of beast." End quote. Sure, you have to think. You have to ponder. You have to have a strategy. There has to be emotional understanding of you, your environment. But you still have to have a little beast in you. You still have to have that drive. So big shout out to Kevin Garnett and the beast. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, Trend Following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com, I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.